Here are 6 real estate investing tips that can help you be a hedge against inflation and rising taxes. Number 1, while purchasing power decreases, mortgage typically remains steady. And so inflation means that the cost of living is on the rise while purchasing power is on the decline. And what does that mean for you? Well, as a real estate investor, your property value will likely increase and rise while your mortgage payments stay the same. Number 2, inflation can lead to higher rental income. And as housing prices rise, more consumers are looking toward renting rather than buying. And real estate investors can capitalize on this by charging higher rents while retaining the lower mortgage rate payments. So not only does the inflation create higher rental incomes, but it also creates new renters, and a combination that real estate investors can benefit from. Number 3, real estate appreciates over time. In 2022, the average interest rate of checking account was 0.03. Inflation punishes those who wait, and it rewards those who invest in appreciating assets like real estate. Number 4, saving taxes. No matter how profitable your investments are, what matters is how much you get to keep it and actually get to keep it. And as a real estate investor, you are a business owner in the eyes of the IRS. And this means that you can take advantage of all the tax savings deductions to you. And this means that you can take advantage of all the tax savings. Number 5, write off business expenses. Did you pay for attending a real estate conference or your property insurance? Or like me, here I am. I was in Louisville, in Kentucky. And you get to write all of those things off because if those costs are tax deductible because they're business expenses. And since the tax code views real estate investors as business owners, whether you're incorporated or formed a business entity or not, any ordinary or necessary expenses related to real estate investment are generally tax deductible. As property values continues to rise and inflation drives prices higher, appreciated values of your property is not subject to tax capital gains until you realize those gains. And that means that the property that you buy today, for example, the home in Louisville will cost $300,000, for example, and it may be worth $500,000 in a few years, but you don't pay the capital gains on that 200 increase until you sell that property. Number 6, selling real estate efficiently. So one of the most popular tax benefits for real estate investors is the ability to defer capital gains using a 1031 exchange. Now this tax benefit allows you to sell one investment property and defer the capital gains by immediately purchasing another investment. There is little that you can do to control inflation and taxation, but in real estate investing, it can open doors to unique opportunities, even in the most unprecedented times. Please give me a call. I'd love to catch up with you and find out what your goals are. Thanks. Hope you're having a good day. Bye-bye.